All right, hey there. Good morning, everybody. It's just after 11 a.m. Central Standard Time here on, what is it, Tuesday, right? The 26th of July, 2022. I'm Christopher Franks with Texas West Capital, coming at you live from a warm bit of Texas there in Bernie. But it looks like I may be coming live to y'all from the Houston area here probably in about a month and a half. So I'll let you guys know about that. By the way, once we get the relocation, the office relocation over there to Houston, I'm going to be putting together a at least monthly, potentially bi-weekly meetup. So if you're in that area or somewhere close enough that you'd feel traveling to that, exciting times, right? Talk about all things trading. We'll maybe put a little special emphasis on crypto, but we'll talk about a lot of the stuff that I talk about here more in depth. And you can probably ask me more, more questions and whatnot, and that you get in person. So anyway, yeah, we're doing that. Who's here already? Oscar, what's up? Let's see here. Hank's here. Who else is here? Oscar says, "Wake me up when 14,000 Bitcoin." What's up, Data? Crypto Mother, good to see you checking in. As always, guys, you can join us here at howtotradetowin.com. We'd love to have you there. We've got so many exciting things happening as this year progresses. I've got two big announcements. I told you probably be this week, so if it's going to be this week, it'll be Friday. Worst case scenario, it'll be next Tuesday, but we're getting there. I'm just trying to get everything together before I announce it because it's pretty friggin' awesome, man. Anyway, so a lot of stuff going on there. Oh, man, what else do we have? Like I said, yeah, join us here at howtotradetowin.com. We'd love to have you there. Before I go too far here, guys, let me go ahead and do this. So, our friends over there at Elliott Wave International often give me, some access to some free stuff they're doing. Sometimes it's stuff that they give a lot of people access to. Sometimes it's stuff that only us and, myself and a few others have access to. This is something that everybody's going to have access to here, but you can go over to them on this link here. Let me kind of put this in there for you guys. And you can go ahead and check out this their financial forecast service for a week. They're going to give you a big discount on it. And I'll tell you what, guys, when they do something like this, I'd probably jump on it. Guys, the reason why I partner with them is because they have such great information, a lot of really great, understanding of the market. They kind of, them and us, man, we kind of think along the same lines. So, I don't usually push really much of anybody out here, but man, when they give you opportunities like this or free stuff, man, definitely jump on it. All right, so you can jump in there and check that out. A lot of good information. Let me see here. Yeah, they talked about the meme stock meltdown there. What is this here? The U.S. Household equities holdings as a percentage of total assets. Crypto, Voyager dropping, Coinbase Global dropping, stuff and all that stuff that you guys are interested in, or at least I believe you are, because hey, you're here as traders, right? Even if you're a holder though, an investor, I think a lot of information is really great because it'll help you give you a better understanding of the market, something that you can actually understand what the fundamentals mean, right? Because you get a lot of people talk about fundamentals and you're like, well, but really, what does that mean, or how does that work? They do, like me, they do a lot of explanation in there to kind of help you bridge that gap and get that connection. And then you can kind of see what's on the chart and how that actually relates to what people are looking at as far as fundamentals are and whether or not those fundamentals mean what they think they mean. Again, the way I look at the way they look at it is a lot of the same, which is, how I've been able to tell you guys what the Fed was going to do with the interest rates since I've been doing this since 2018, right? Regardless of what the Fed actually said, I said, here's what they're going to do, and it's done it, right? Every year we do that. And so here we are. We'll see it is. So anyway, yeah, join us here. Join them with that, really cheap. Look at that there. Speaking of which, this is the U.S. 10-year here. I believe Mr. Bennett was asking about this last week, and I was done before I could do it. I updated him there in Discord because he's a member with us. But for you guys that were wondering, I mean, look at this, guys. This resistance since October of 81, guys. Look at this. Look at how this has worked, right? And so you had this last touch in November of 2018, and then this big move down, which reached the low down here in the March of 2020, right? big move down is going to beget a big move up, right? You just snap back, right? It happens. This is the monthly. What I want you to see here, though, is I believe we're topped out for right now, at least for right now, right? You can see that we've got this this inverted hammer, which is a potential reversal, and we're getting that right here after this doji. So doji, inverted hammer, and now we're getting a bearish engulfing candle right here, right? So I believe we're going to see this come on down. You know, again, everybody thinks Fed's going to, you know, keep on keeping on, you know, for another year or whatever. I don't think so. I think, you know, again, I've been telling you guys, I think that the Fed's going to be done here probably, you know, end of Q3, beginning of Q4. So coming up here in the next few months, as far as starting to pull back on what they're doing. This next raise of rates here, may, you know, I'm kind of figuring maybe their last one. You know, if they raise after that, it's going to probably be a lot less significant. And then then they'll, you know, go into a reversal, right? They'll start lowering rates again. But, you know, the 10-year seems to say that, right? So as you can see, you know, just dropping out of overbought on the RSI, Stoke RSI just crossing bearishly here and overbought. Yeah, I mean, I don't know what else to look at here to really give you something. We've got bearish divergence right here. So we've got lower lows off the top of the RSI here. And we've actually got higher, lower highs there, and we've got higher highs here. So, you know, bearish divergence showing up at the top again with that candle construction there. I mean, it looks like we're heading down. And so if we're heading down, we should be coming minimally down here to 1.5 at least, right? So 1 3/4 maybe right there, but I think we're at least coming down to 1.5, probably breaking down further. So I don't see a lot of, you know, again, guys, with markets, people tend to get very emotional at the extremes, right? So when price is dropping, oh my gosh, you can't ever, you know, it's never going to stop dropping. It's going to keep going down lower, keep shorting to zero, right? And then when it's up at the highs, you know, oh, it can't ever stop. You know, it's going to keep going higher. But remember, we talk about how things like commodities are different than stocks, right? Because stocks, everybody gets in them at the top because they're excited it's going up and they think, hey, they're all going to be millionaires yesterday, right? Commodities go up, they extend at the top there because people are fearful. You know, again, we think of things like famine or war or stuff like that. And people, you know, become fearful. And so they buy that stuff, those commodities, because they've got the thought process that it's going to decrease, right? That it's not going to be as available. And so, you know, again, same thing with interest rates. You know, interest rates keep rising. They've risen pretty significantly here. And people are thinking, oh my God, they're never going to stop. They're going to keep going up because, you know, the economy's going off a cliff and it's just going to all crash and all this stuff. And so, you know, they tend to get overly extreme at the extremes, is what I'm trying to say. So, you know, we talk about investor or trader sentiment a lot. And for most, you know, for most amateur traders, they go, okay, well, my Twitter feed says this. People are bearish or people are bullish. And they think that that's what that means. And it's not really it. Remember, your social media feeds, guys, are curated for you, right? So the AI kind of figures out what does it think that you want to see, because if it can do that right, then you spend more time on the platform and it makes more money, right, from the advertising and all that other stuff. So don't ever just assume, just because your feed is bullish or bearish, that's really the way the market is. The AI is figuring out what you potentially want to see based on your interactions with all the news and everything else on its site, and, you know, other people's posts and stuff like that. So, but real investor sentiment, you know, real investor or trader sentiment or whatever is a lot more, is a lot bigger in there, right? It's kind of like that thing. If you think about Bitcoin up at the top there, not the 69, but the first one, like around 62 or whatever, when everybody was all about the laser eyes and all the other nonsense, all that silly stuff. You know, and I told you that was probably a top, not the top, but at least a temporary top there, local top. And yeah, you know, it was. That's the kind of sentiment that you're looking for, not just the couple of things that are kind of on your news feed there, okay? Oh, let me see here. Who else is showing up already? Chance, what's up, man? Wazobia, good to see you. Jared the Great, what's up? He says, I may come to Houston for a meetup when they get going. Man, that would be awesome. I'd love to see you guys there. We'll take pictures. You'll know I'm real, right? Other than this, maybe this is a deep fake video, right? I've heard they can do that. Let me see here. Who else is here? Onyx King, what's up, man? Yeah, good to see you checking in, buddy. Andrew Bennett's here. Nay, Mr. Wilkes, as always. Dancer Eddie. I still love that name, man. I always think of Uncle Eddie from, what is it? National Lampoons, man. If you guys aren't fans of National Lampoons, Chevy Chase and all that, man, I don't know what's wrong with you. Let me see here. Is Ethereum looking better long-term than Bitcoin? Mr. Wilkes, I'm going to tell you, buddy, I think that, it's always been that they just kind of move together, right? So, I mean, the odds are that Ethereum, because it is an altcoin, like all other altcoins, should generally outperform, for the most part, Bitcoin, right? But if Bitcoin's going up, they should go up. If Bitcoin's going down, they should go down. Ethereum's kind of leading the way, rallying up right now. It broke out of its, its local, kind of its accumulation area there, and it's broke out, headed higher already. Bitcoin's still, some people would argue struggling a bit to get it, right? But, generally they should move together, more or less. Yeah. Mr. Baker, what's up, buddy? Matthew Bolts is checking in as well. And then we got, these idiots. Let me see here. Got rid of them. All right. Somebody else might have already done it, but yeah. Onyx King says, I'm not sure the Fed can afford raising rates too much without destroying other economies. Europe and Japan are already on the brink unless they start buying foreign bonds. Yeah, there's a whole... I've told you guys before, there's this really big, a real huge interconnection here, interconnectivity across global finance because, the dollar is the reserve currency, and how that affects everything. And, Arthur Hayes... I don't have a link to his article at the moment, but if you guys follow him, the old BitMEX guy, he had a pretty good theory that he ran up talking about, the Fed and the interconnection with the BOJ and the ECB and everything. I'm not sure that I agree 100% with his take on it. I mean, I think it's possible, but I don't know that I necessarily agree that's how things are going to work out at the moment. But yeah, again, guys, remember, the Fed is always playing catch up. They don't lead, right? So the Fed doesn't change what's already happening. Remember, we talked about the Fed raising the rates after things were already going on, right? After the economy was already doing its thing. And then, and so now we're here at the top, right? At this big move up here. And the Fed wants to start, we'll probably start pulling back, right? I think they will anyway. But everything else is already slowing down, right? You got Janet Yellen saying, hey, I don't see any real signs of the, economy kind of dying off, recession coming in. I don't see anything of that. I mean, you got to wonder, do they really believe that? Or are they just, putting the words out there, right? It's a crazy, crazy thing, guys, when you're in government. Because you have to say things. Even if they're not true, you have to say them. That's what makes government so, right? You have to lie. And so, I don't know. I don't know how you don't see a recession incoming with the things that are going on. So if you look at, let me see here, guys. If you look at, let's find here, the job market, right? So this article here talking about the job market. This is just one of them. I just pulled it up here. It's talking about, 7-Eleven, which is a convenience store chain here in the U.S., laid off 880 corporate workers in Texas and Ohio. Ford is planning to cut 8,000 positions. Rivian is cutting 700 positions. GoPuff is laying off 1,500. Loan Depot slashing 4,800 jobs this year. First-time filings for unemployment benefits rose by 7,000 and are up 51. They're up 51% from mid-March, guys. 51% since mid-March. Now, they're still near a historic lows, but man, oh man, that's a big run-up off mid-March, right? It says the Fed expects the unemployment rate to gradually rise from a 50-year low, near a 50-year low at 3.6% to 4.1% by 2024. But, guys, remember when I showed you that chart when we were looking at that, and I said, historically, we're at that low, that 3.5, 3.6 level. I said, I think that's the bottom. I said, I believe we're going to start seeing unemployment rise. Remember when I did that a few months back? And so here we are now. Um, so, and of course we all know about, what happened with Coinbase, and others laying off jobs, Apple, people like this, right? Meta laying off jobs, Microsoft laying off positions as well. So you've got all these jobs being shed, right? And so you got Yellen at the Treasury and Powell over there at the Fed going, well, don't really see a recession coming in. We're just really low with unemployment, so this is going to happen, but we're probably all right. I don't buy that, guys. I don't buy that. I think it makes a nice move up, which then, if you're the Fed, you've got that dual mandate. Employment, is that other part of it, right? And so if you've got this sudden increase in unemployment or whatever, the Fed's going to have to go, we're going to have to, they're thinking always, is about interest rates and yield curve control and all that kind of stuff, right? And so they're going to get into action. But again, it's always in answer to something that's happening. They're always responding. They're never actually leading, right? So people say, oh, well, the Fed's going to do this or that. It's not, the Fed doesn't do a dang thing, guys. They just come in and make things worse. Things are already getting bad, or not so good and getting worse, right? Getting not so good, I guess you could say. The Fed comes in and makes it really bad, right? Or things are already starting to, they bottom out and they're starting to come up. And the Fed goes, oh, well, we're going to jump in there and get this going. But it's already going up, right? And the Fed says, hey, look what we did. And then people believe, right? Retail traders believe. They believe the Fed did something. Not really. But hey, right? But yeah, so, there's the job market, guys. Homes, we've been talking about that, guys. I've been talking about that for months now, right? Told you I believe that the top was in, about 2 months ago? And we've seen prices dropping now. Now, this particular article here talks about home builders' confidence. It fell significantly here this month. So it dropped to 55, right? And that's a drop. That's a huge drop from 67 in June, guys. So that's a 12-point drop from June, okay? Now, that's the lowest number reported in the index since the midst of the pandemic in June of 2020. The drop of 12 points is the largest on record. The largest on record. The 12-point drop from June to July. Except for the fall in April of 2020, which was, again, right after everything crashed down there in March of 2020 for the pandemic, right? So it says barely above the 50 score, which means home builders see the market positively for sales. The new index is a scorching sign that the U.S. housing market is navigating dangerous waters, right? Blah, blah, blah. Biggest drop. Here it is, guys. So it's not even necessarily like the whole thing, okay? So there's some thoughts about a housing crash, and then there's the alternate argument that maybe it just kind of goes flat, more or less. I think if you're in areas like it's saying here, the South and West regions, which fell 15 and 16 points respectively, right? So if you look at the hottest markets, they've been like Florida, they've been Texas, Boise. I think these are where you're going to see like your most significant drops in home prices. The rest of the U.S. outside of these really hot markets, that have been hot here over the last year, I think there's a good chance they may just kind of drop a bit and kind of flatten out a bit. Because that inventory is still pretty low. What they say, like 15 to 20 days inventory right now on houses, I think. But you've got your home builders and whatnot that are, let me see. Do I have that article here? Yeah, here we go. We've got home builders who are starting, not only do we know that people are canceling their orders now, right? Increasingly more and more for new home build, right? But home builders are starting to stop their production because of the cost of everything so high that it's pricing the construction of the home out of the market, right? You can't spend $500,000 to construct a home that's going to fetch a price of $400,000, right? So we're seeing all that. We've got other stuff going on here, of course, with the housing. Again, it's the home starts, it's the new construction, it's the overall sales. We know that mortgage applications are down significantly. And within that, the amount of the mortgage price there is lower as well. We know that showings are down. We know that just everything is down with the housing market right now, as the interest rate kind of ran up there. But like we talked about, here a few weeks back, when the Fed signaled they were going to raise the interest rates another, half point or whatever, 3/4 of a point, the mortgagers dropped it a half point all of a sudden, right? That was the beginning of this month, I believe. And so, of course, they're working. Usually they listen to what the Fed says, and then they, adjust according to what the Fed says. This time around, they're not just looking at what the Fed says, but now they're going, man, yeah, but our numbers are saying we look like we got a recession coming in, so we can't be raising it like that. And so, again, kind of sitting at this area now that's really kind of interesting, here for homes. So, home prices down. And when you think about inflation, two of the biggest drivers of inflation are energy and homes, right? There's food in there too, but really it's homes and energy. And so homes are dropping, right? They're pulling back. We know that energy is pulling back a bit, right? And may pull back a lot further. It may have topped out, right? So if those two things have topped out and they're pulling back, well, then inflation is, this whole CPI number thing is going to pull back. And if that whole CPI number is pulling back, then what does the Fed have left to do? I mean, why would they continue raising rates, right? So if you need a narrative, that's kind of what you'd be looking at. But yeah, again, everything that I've talked about, guys, pretty much happening, right? So you guys have been following me for at least, 6 months, maybe a year, right? Some of you guys, 4 years, almost 5 years. And you see, a lot of almost exactly what I talk about is what's happening, right? So I don't see any reason to change my views on things, until it gives me a reason to, and it certainly hasn't yet. So, we'll continue to look for that. Again, people tend to get... One of the biggest things you can learn about the markets is traders and investors and everything. They tend to get extreme at the extreme. So whether price is rallying or dropping, that's when they tend to get loudest. As they're nearing those extremes, as they're nearing the top of the rally or the bottom of the decline. So just kind of keep watching on that, guys. Okay. Let me see here. Hank says a deep fake of whom though? Of me, of course. Baltazar, what's up, man? Let me see here. Matthew, what's up? He says, any chance at all that we may have a leading diagonal over these past few weeks instead of a 1-2-1-2 on Bitcoin from the lows on the 4-hour daily chart? Yeah, let me look at that here in just a minute. There was one I was looking at, but then we've overextended quite likely from that, and so it would make wave 3 the shortest, so I kind of got rid of that. But yeah, we'll look at that right here in a minute. Sure. Onyx King says expectations management. Yeah, of course, right? Let's see here. Hank's mentioning that companies worth more than 4.36 trillion with a T combined are reporting earnings after the bell today, including Microsoft, Alphabet, Visa, Texas Instruments, TI there, Monolith, Stryker, Chipotle. Interesting. I've never heard of Interesting. Is that a company? No, I'm kidding, man. All right, anyway, so yeah, so a lot of stuff. Pay attention to what's going on. It's a busy week for markets, guys. We've got that going on today. We've got the Fed tomorrow. So, yeah, there's a lot of stuff kind of going on here. We've got non-farm payroll reports coming up next Friday. So not this Friday, but next Friday, less than 2 weeks away. So we'll have that coming in as well. And, of course, the CPI coming in after that. So I know somebody in Discord had mentioned that it seems like all we do now is look from one Fed meeting to the next, and they missed the good old days of 2017 talking about crypto. Let me see here. Fernando, I'm sorry about that, buddy. 5 years for you. Been following me along that way? Man, I love that. That's awesome, man. Silvio, good to see you, of course. Let me see here. Hank says, if the absolute numbers are low, minor nominal increases are big percentage increases. Look at the Bitcoin price. Yeah. So we'll see. We'll see what happens, right? But, again, guys, I don't really worry about I don't really look at all that myself. To me, that's always, it's always in the charts. Doesn't mean that we always read it correctly, guys. I think that's a big misconception for a lot of new traders. When I talk to them about things are in the charts, right? And then if I don't read it correctly, right? They're like, oh, well, it wasn't in there. Well, no, it's not that it wasn't in there. It's just that I'm human. I'm not a computer, right? I can't know the outcome of every decision, of every possible decision there is, much less the whole decision tree from that, right? If you come up to a fork in the road, you got a left and a right, and you take right. Well, you don't know. You can maybe figure out what might happen if you go left, but then on the right, you're going to have now another left and a right, right? So you take another right, and then you have another left and a right. And so you get this huge decision tree. There's this butterfly effect of decisions, right? And so as human beings, guys, you can't possibly know that. You can't possibly know that. Which is why risk management, I can't even say it, is so important as a trader. Okay? And it's different depending on how long you've been in the market. If you are a brand new trader, I'm going to tell you what right now, there is no God-forsaken reason that you should be risking more than 1% of your portfolio on any single trade. Period. There is no reason, guys. Because you are new, you are just learning, you really don't have any experience, you don't understand or how the market works or have a feel for it yet or anything, you are going to make a lot of wrong decisions. There is no reason you should be risking more than that. Now, as you become better and you start getting a consistent track record of profits, of profitable trades, and over time, again, your account balance is building up rather than dropping down. Well, then you can tweak that. You can go bigger. And some trades you're going to, as you become a better trader and you become more experienced and you understand the market more, you're going to notice, oh, well, this looks like this is a really good setup here. This is a higher confidence setup. The risk reward may be 0.5 point or 0.5% or, 0.5 is what I'm trying to say. Rather than 1-to-1 or 2-to-1 or 4-to-1 or something like that. But the odds that it's going to play out based on what you know from trading the market so well for so long, it's most likely going to happen. And so your risk your risk management includes that as well. So you can take that trade that has a lower RR because it's more likely to play out, right? But that's not something you do as a new trader, guys. It's not something you do as a new trader. And unfortunately for new traders, this is a real big point of contention because they want to make as much money as they can. That's why with leverage, new trader, everybody's scared of using leverage. There's nothing wrong with leverage, guys, unless you use it wrong. Right? So if you were gonna put 100 of your own dollars into a trade, you're taking on all the risk, right? You're taking on all the risk. Guess what? If you take 50 of your dollars and you do 2 times leverage, you just slashed your risk in half. Not only did you slash your risk in half, but you increased your return on investment if you're correct in your trade. So, I mean, it's not that leverage itself is bad. It's how do you use it? Most people go in and they use it and they go, okay, well, I was going to put $100 in this trade, but now I'm going to amp that up to 50 times leverage. So now it's that $100 is working like it's $5,000. That's the problem. That's the problem with leverage, guys. But again, you use it you use other people's money there to de-risk, to increase your return on investment. And then as you become a better and better trader, you might actually start using a little bit of leverage to increase your what you can control, to increase to get you a larger return. But you shouldn't be doing it like Three Arrows Capital there, right? I mean, just completely. Did you guys read that interview with them? It's almost like they don't want to take any responsibility at all for what they did. Oh, but everybody else too. Look at Celsius, look at Voyager, all them too. We weren't the only ones. Doesn't matter if you're the only ones. You're the ones, because you had everybody's money with you there doing that, you're the one that led to everybody else. Yeah, everybody had their part. Everybody has to take responsibility for their part. But don't sit there and try and shrug it off like everybody was doing it, so we're not the only ones. Why are you mad at us? Kind of nonsense, right? It's all about taking responsibility, guys, okay? Let me see here. So, here we are locally with Bitcoin, guys. I'll talk about this and then I'll zoom out a little bit and see about that leading diagonal possibility. I've got this as a 1-2 and then a 1 up here and a 2 down here. You can see that we're right here between the 61.8 and the 65% retracement. I've got this as a W, X, and a Y here working out, okay? And so in doing this, wave Y here equals wave W. Right here at the EQ of this, this is the daily demand structure here in purple. Right there around the EQ is where that is, okay? We had bullish divergence. We didn't anymore. It dropped down. But we're trying to break out of overbought here. We dip back down. We're trying to cross bullishly here on the Stochc RSI. This is all in the 1 hour. So what am I looking for? I'm looking for a breakout above 21,258 and 76 cents here. That's at local swing high, that local resistance here on Coinbase, okay? If we can get a breakout above that, to me, that's the first hint that wave Roman numeral 2 there may be complete. But what do we need beyond that? What we really need is we need to start seeing after that a breakout above the 15-minute pivot here at about 21,735 and a half or so. That's the top of that accumulation range that it looks like we've built down here, right? See that? That's where that is. You can see that right now we're at this high volume node area. So we want to see that hold and rally up from there, okay? So what I'm looking for on some rally here is I'm looking for a breakout above 21,258.76, and then the 15-minute pivot here at 21,735 and 68 cents. Then wave parentheses B of wave Y here at 22,271. 4-hour pivot right there around 22,548 and a half or so. And so these are the levels I'm watching as price rallies. These are my targets. As it gets through one, these are my next kind of targets, right? Just general targets. And then we want to see the breakthrough wave circle X up here at 23,036 and a half. If we can get through this, this is the key right here. This adds confidence to the account and says, okay, wave Roman numeral 3 is likely in progress toward a minimum expected target up here of this 29,525 area. Now, right now, I told you I've got a 1, 2, 1, 2. So this 1, 2, 3, parentheses 3 has a minimum expected target there of 25,666. That's why I've got that there. But if this count is correct coming off here, we've got this 1, 2, and the bottom's in 3 should be targeting at least up here around 29,525. And so remember, guys, I told you I was ultimately looking for this rally up into 29,000, 30,000. Everything else aside, that's kind of where we're looking at, right? So this kind of takes us up in there. If we continue breaking down, the 70 and a half here at 23.45 is my next target, and then 78.6 here at 19,935 would be kind of where I look at. That's right around that July open. I don't want to see that, though. If we're dropping down into this 78.6, especially impulsively, I think that probably says that this whole rally up here, that this is wave 4, and we've still got wave 5 coming down again, 15, 14,000 area. It doesn't guarantee it, okay? And that's just the 78.6 of this move here, right? Can I pull this out here? Okay. So, I mean, again, off this this June 18th swing low here, we've got a high, low, higher low, higher high, potentially a higher low here. So we've got bullish market structure for the last month and a week or so, 6 weeks. So what does that mean? That means if you're trading here on anything under like a 3-day or something, you should be buying the dip rather than selling the rejection, because your trend is up right here. Okay? If you're trading 4 hours, something like that, you should be buying the dips. Trade in the direction of the trend. It'll decrease a lot of your losses. Okay? Because you're not trying to trade against the trend, which can get pretty crazy. Corrections can be kind of difficult, can get kind of crazy, and then get kind of complex. So if you're buying those dips rather than the rejections, in this case, because we're going up, then you got more of a chance of being more correct in the grand scheme of things. All right. Let me see here. What's up, Bamboo? Good to see you. So I mean, again, and all we've done here really, guys, is we've pulled back into this previous area of support here, right? So you see you've got this support, resistance, support, resistance kind of area here, and it's kind of this area right here, and that's all we've hit right here. As you can see, this is the 4 hour. You can see that we did reset into oversold, trying to break out here. Stochc RSI bottomed out and oversold, crossing bullishly, getting ready to try and break out as well at the S1 pivot. So again, if you're just trading pivots and you're coming in sideways like this between the pivot and the S1, you look for a rally off that S1 to break out. And if we can get that, that should have us rallying up. So that's what we're looking at here, right? What else can we see? Ultimately got rejected around the daily pivot here. Again, normally what you look for, right? You look for a rejection of the pivot, you pull back, you gain support, and then you break out. In this case, by the time it gets back up here, I don't know. I guess it could probably get up here sooner. I was thinking it might be the end of the month, but no, we still got another 5 days. I can see this breaking out here. But, the daily pivot at this point isn't such a big deal. We'll have it, it'll change at the end of the month, right at the beginning of next month, and we'll probably see it coming on down here toward this 21,200 area or something. 21,500, 600, somewhere in this area. We'll probably see it move down to. That R1 pivot should generally stay about the same. But anyway, yeah, so that breakout through there should rally on up to the R1 pivot area, which again is just the high volume node. Again, we're looking at 29, 30,000 at least. All inefficiencies right here, right? Now we can find about halfway through here, this wick right here, this demand right here. So right here about 26.5, 26.7, around that area. I can see us hitting that and pulling back and then breaking out. I can see some resistance right there because we just kind of dipped right through it here. We didn't really test any of this area. So when we come back up, it should work as supply. So hitting up about the EQ, that supply, pull back, and then continue up higher. I can see that for sure. As far as this being a leading diagonal, I mean, I was looking originally maybe like a 1, 2, and then 3, 4, and then 5. But we can't look at that anymore because 5 and 1 are larger than 3. So 3 is the smallest of those 3, and it can't be. That's a rule. That's an Elliott Wave rule. So it cannot be broken. So, yeah, I don't see how we'd have a leading diagonal on that. From that way, I think it's much clearer as a 1-2, 1-2 on that. So, yeah. Why price would go down if we reach 78.6? Wouldn't it be a good demand area? Well, okay, so look at this right here. You see this high volume node right here? So as long as you're on top of it, it works as support. Okay. Remember, the high volume node doesn't tell you whether people are bullish or bearish. It just says at those price levels, the market finds the most interest. So if you're on top of it, that means you're going to be seeing a lot of interest in buying. But if you drop down below it, all of a sudden it becomes selling. It becomes supply. It's not that you can't break back up through it, but it becomes a lot harder because whereas they're providing support here, buying, if you're dropping down below it, that's going to turn into selling now. And so now you're going to have that to deal with. So yeah, I mean, that's kind of, the big deal about that kind of area right there. If we get through. Now that's just the 78.6 of this move here. It's not off the bottom here. But right now we're looking at this as a 1 and then a 2 as a flat here. And then a 1 and a 2 here. Something else I was kind of looking at is it possible maybe that we get a 1, 2 here, and then maybe this is a 1, 2, 3, 4, 5, and so maybe there's a leading diagonal off that. So it'd be 1, 2, and then we go 1, 2, and then 3 of 3. If we were to see something like that, I think we would blast through this area here and then come back and retest it as support because it would be wave 3 of 3 that would be carrying us through here. So 1, 2, 3, 4, 5, right? So it gives us 1, 2, 1, 2. So 3 of 3 taking us through this area here. And I think that would be like super bullish. So if that did happen, I think you guys should just prepare for, a rally on up here. I mean, you're going to at least get to this next area up here, 45, 50, but I think we're definitely, testing that all-time high if we do that, if we get just a rally like this through this area here. Because if we do that, again, it should pull back to this area and test it as support. If we rally up like this through this area, we should get rejected, come on back down here, test it as support because we didn't test it as resistance. So basically it's saying that these guys allowed us to go through. which means they're interested in being long. They didn't come in here and throw supply in there. So it rallies up through it, and then they come in as support. Come back, you pull back to it, they start buying. And other people who aren't in start buying. Then we go up. But yeah, just locally there, again, it's just off this one. And so hitting that 78.6 down here takes us below that high volume node, which puts a lot of downward selling pressure on it. And this structure isn't conducive to 5 waves. So it starts looking like maybe an ABC. 1, 2, 1, 2 could be an ABC. Again, be wave 4 instead of 3, 4, 5. This would be 3, 4, and then 5 down here. So that's why. I hope that makes sense. Yeah. Hank says, I know MAs are lagging, etc., but we respected the 200 MA weekly, especially on the weekly chart. Well, is that where it would be on the weekly chart? Let's check over here. Let's see what you're talking about. Do I have it on here? Oh, I don't. Let me throw it on here real quick. You said the 200? Let's see here. All right. Yeah. Oh, yeah, that was the one we were talking about, right? So I've got another chart here I'll pull up in a minute on the BLX. But yeah, finding that resistance here. Now, with this, what's important for me to note right here is you see this area, see all this resistance right here? You just wick up above it right here. Look what happens. You get up above it and we come back and we push up here, right? We get rejected. We're trying to find support on this area. So if this area holds a support right here where we had 1, 2, 3, 4 weeks of rejection, and then the 5th week it popped up above it, and then if we can continue finding support here, I think we break out above that pretty easily. And we move it on up there. Yeah. Because again, you guys can see that right there, right? See, you've basically got this resistance right here. And where we're trying to find support right now and push back up. That's what I want to see hold right there. Again, breaking our way out of overbought or oversold there on the weekly RSI. As well as Stochastic RSI there. So if this can hold right here, I definitely think we break out above here and we head up here to this $29,000, $30,000 area minimum. Like I said, the other idea is maybe we work this as a 1, 2, 1, 2, get rejected, come back, and then break out through it, come back, find support on it, and head up. So I could see something like, let me see, something like this happening. Pull back, break out through it, pull back, like that. I could see us doing something like that with this area here. But whether we do it like this or we kind of just get in here and we just go boom right through it, we should come back and retest it as support and head up there then on that. See right here, you can go back in time. You see how that works? Just kidding. But yeah, I mean, either way, I think this becomes that area. You break above this, I think that pretty much says that we're headed up. Until we get above that point, until this provides support, it's still possible that this is a wave 4 and we have a wave 5 lower. But I think once we confirm this as support, I think that pretty much says all we need to hear for this to rally on up through. So that's what I'm looking for. Yeah. So that's what I'm kind of looking at there. Let me see here. Where's that other chart I was talking about? We've got bear USDT here we've been watching. If you guys are drawing this, you know for a fact you'd be doing this, right? Like that, right? But yeah, so looking for it to continue lower. As you can see here on the 4-hour, we've broken out into overbought here. Topped out in Stochastic RSI overbought there. Looks like, A, B, and then maybe 1, 2, 3, 4, 5. So A, B, C maybe. Or even A, B, working on C here. Come back down. But still looking for bear USDT here to head on down toward this 0.0001028 kind of area right around the ascending channel support. This, of course, is Bitcoin right here. But that looks like an ABC right there. And so we want to see this dropping back down below wave B here to kind of confirm that. And then we should be heading way down here. So if this is doing this, then Bitcoin's going to go up. So we kind of watch this to see if we can get maybe a little bit better read on it than what we're seeing here with this overlapping price action. This a little bit more significant, even though it's still overlapping a bit, opposed to this right here. So continue watching that. Let's see here. Where's that BLX chart? Is this it? No, this isn't the one. Let's see here. Well, doggies. Let's see if I can find it in here real quick. Is that it right there? Nope, that's that one. I had it up here. Let's see. Maybe this one, maybe. No, something else we were looking at. Oh, well, all right, anyway, so for right now anyway, we'll look at this. Again, nothing really changing here. Rejection at the pivot. This has the hash rate here, hash ribbons on it. So again, you see we had this is the daily. Let's kind of move this out to the weekly here. There we go. So weekly just kind of doing its thing, capitulation, looking for that the hash rate to to combine and roll back up. Remember, we had bullish divergence here on the weekly MACD histogram. So during that time, you can see we got lower lows here in price. We got higher lows there, so a bullish divergence there. And right now we can see that we've curled back up and we're nearing that cross, that bullish cross. We want to see that kind of break up back up there, see if we can get some follow through on that weekly. Get through. That's the 200 MA that Hank was talking about right there on this chart. If we pull this channel kind of down here off the swing low and this swing low and this swing high in between them, that EQ works pretty well as resistance support there. So we broke out above it, come back, retest it, potentially head back out. So we'll look at that as well. But yeah, that weekly shows the channel with Bitcoin hitting the EQ. Yeah, this right here. Yeah, potentially on that, right? We can do this one here. Off the laser eyes top. And so that one, of course, we haven't hit that EQ there. Let me see here. Yeah. Yeah, if we break down, I can definitely see us getting down here toward the 14.5 or so on that. If we break down below that swing low there. But if you've been long off that so far, you're good. You're right here above the, what is this? The 2021 yearly open there. 2022 is up in this area up here. Not quite up there, but almost, right? So you've kind of got this area here that we're looking to move through. Let me see here. The dollar. 12K? Yeah, potentially. I mean, if we're going 14, potentially 12. But, again, we've still got to lose the bottom there to do that. So, until we do that, now you can look at it previously. But really, until you do that, there's a lot of possible things going on there, right? What are my dual screen settings on TradingView? When I split screen, it goes back to a black background and green red candles in none of my drawings. What are your dual screen settings? So all I do is, yeah, sometimes it'll bring up, the default or some previous setting that you may have had. And so I just usually have my settings down here in color themes. And I just click on the one I want. And then same thing with my indicators up here. Sets indicator settings right here. The templates. And I just toss the template on there, and then you can click on it and go to, you'll have it where it says use the indicators across all the different charts, and you can click that and it'll just set it up across all of them. Yeah. It doesn't just, yeah, it doesn't usually just check to a different one. I've got this set here because whoops, hit the wrong button there. On my dual screen there, on the one I have with the two charts, it's already set up like that on that one. So that's why it's already set up the way I want it. But yeah, a lot of times if you go up here and you just, go up here and you click a new one, it'll take some, either the default settings or some previous settings you used. A lot of times it'll pull it up there depending on what chart is bringing up. And then you just have to, change with that. But guys, if you aren't using the color theme and indicator template, if you're just not using the templates and stuff, you're causing yourself to have so much more work. If you're like me and you use a lot of different charts, yeah, it just makes a simple, quick, and just a click and post kind of thing to get it all to the way that you're used to having it. Yeah. So DXY here daily. We're bouncing here today, getting a little bit of a rally off the R1 pivot. We'll see if we get some breakdown further here. If we jump here to this 3, 4, 5, looks like we may just peak out a little bit higher here. Still trying to figure out exactly what may be going on with the DXY here. I think it's topped out. I still think it's topped out here, but just trying to get a handle on what's going on here. If we zoom out here to the daily. Yeah, see, again, it's off that R1 pivot there. It is possible that maybe we've got some sort of flat correction going on here. So it might be like, off the top here, instead of 1, 2, 1, 2, kind of like I had it, it looks like it might just break out through here. We got a lot of wicks up into this area right here. But if we're breaking out above that, I think, it's possible we may have a 1 here and then an A and a B and then 1, 2, 3, 4, 5 as a C. And then we'll get some pullback on that. So, yeah. It looks like it's going to rip to 120. Nah, I don't think so. I think we're topped out with wave 3 or 5 at the moment. Yeah, I think we've got some pullback still before it goes up there. It hit our... you can see right here, it hit that supply structure EQ right around 109 from right here. This weekly supply structure in that wick. That target is what it hit right there. Now it could, run up higher here. We have broken out. Let me go to the monthly here. Again, we've broken out of this... this kind of channel right here, low, high, low, high. We're breaking out above that. So it is possible that it could rally up there. But, again, at this point here, we're broken up. Here on the monthly, we're overbought. We kind of curled down. It looks like it may want to try and cross, but it just depends on what happens over the rest of this month here. Based on the height of this channel, pattern target would be right there around... make people sick here, 155, almost 156. I'm not sure I'm a big fan of that particular target, but that kind of takes you up into this structure up here, this supply up here from way back in, what is this, February of 85. So I'm not saying it can't happen, but I'm not sure I feel like it's going to happen, at least not yet. And kind of get that up there into that monthly from 85 there. pull it down into the bodies there. There we go. This right here, this month right here, this February of 85. And so we almost hit the EQ of that. Just about, based on the pattern target on this ascending channel here. So yeah. So interesting, interesting times to come potentially. We know the ECB is talking, they're raising rates now, right? So even though they're still talking about putting more money into the system, kind of weird, but whatever. They're trying to fight their own battle there. So yeah, we'll see if we continue that up. I mean, if I look at this, I can go 1, 2. I can go 1, 2, 3, 4, 5. So potentially 1, 2, 3, 4. I can go 1, 2, 3, 4, 5. I mean, I can get 5 here on the monthly, just counting it out like that. It's a lot. Is a lot of that contingent on EU energy issues? They appear that they could lead to extreme economic distress there. I mean, again, people tend to get extreme at the extremes, right? I think I saw something just here about Russia threatening to cut off gas to Europe. What's going on there? But we also know that that Putin is supposedly, very advanced cancer or whatever, Parkinson's, all this kind of stuff. He's got like limited time to live, right? And so, I don't imagine that the person coming in under him, coming in, if something were to happen to him, coming in after him, is going to be really excited about continuing this what appears to be a losing war for the most part for them. They've taken a lot larger casualties than what they expected, what they should have, coming in on Ukraine. But if he doesn't have anything to lose, what does he do, So there's always that. But I don't know that the energy thing is going to be such a thing for too much longer, with his health. So we'll see. Anybody coming in after should be interested in really kind of getting back in good graces with the rest of the world, because China's like their only hope, and China's pulling back on its production and everything else. China's housing or real estate market has gone to, right? And we were all watching from back in the day. What's it called there, right? What was the name of that company? Starts with an E. Oh, I got to tip my tongue. I can't say it at the moment. But anyway, yeah. So, I mean, Russia has to depend on China basically to take their oil and everything. And China's like, well, dude, we're kind of sucking wind over here. We can't really take as much as you need us to take. So, what happens then, right? Wintering in Thailand seems nice. Evergrande, yes. Thank you, Chris. I appreciate it. Balthazar says, I'm already knitting woolen socks to get through winter. Oh, man, wish you could bottle up this heat over there right now, right? Just open it up for the winter. But anyway, yeah, there's a lot going on, guys. But I think the problem, honestly, with new traders is they try to understand all this very complex, very interrelated, interconnected global finance, global economic stuff. Without really having the requisite experience or skills to do so. And that just makes trading really, really difficult. That's why I tell you guys, if you can learn a system to trade with, and basically, guys, they all work. You just have to pick one, practice it properly, learn it properly, practice it properly, and they all basically take you to the same places on the charts, right? So you just have to kind of figure that out and do that. And it's a lot easier than trying to figure out that fundamental side. When you can just, if you get to the point where you're starting to look at, like I often talk about, the markets as as what's going on with the social mood. So whereas social mood plays first and then your charts show you what's happening, it makes it easier to understand the all that interconnectivity I was talking about, all that other stuff. Because, it's making itself known on the charts. And so the charts say, hey, this is what's happening. And then from that, you can deduce what effect those things have or whether they're going to follow through and continue on. As far as interest rates go, my track record is, perfect since 2018 talking here, right? And so, and that's based on that, a lot of that. So, as a testament to what it's worth, as far as I'm concerned anyway. So yeah, we'll see, right? Notice my indicators that Hearst cycles, starting to get into them. What's your experience with them? I like them. I like Hearst cycles. I like cycles in general, guys. So again, Elliott Wave is cycle, Hearst is cycles. K waves is cycles, and I kind of take this blended approach to it. Everyone is just a different way of trying to explain what's going on, and I don't think all of those explanations necessarily really hit it on the head of what's going on. But I think the more you learn about cycles, in my case, especially those three, the clearer the charts kind of look. And even when you're wrong, again, you have clear invalidation levels. And so trading becomes much more mechanical rather than emotional. Because again, guys, I come here and say things, and I get a whole bunch of yahoos all the time that say a bunch of nonsense. And, it doesn't change what I say, right? And then they don't come back and say anything when they're wrong. It is what it is, right? But so I think it really helps if you really want to be in trading for a while. I think one of the easiest things to do is to really start working on understanding probably those three cycles, those three explanations of cycles and how they all kind of go together. And when you learn them, you'll start seeing how they kind of overlap and what's going on there. And heck, if you can throw in Wyckoff on that to really understand your market buying and selling and stuff like that. That'll add a lot to it as well. But really, just need to learn one thing. Learn it correctly, and then practice it correctly. And then all it is just a time thing, guys. You're not going to learn to do this stuff overnight. You're not going to become some expert trader overnight just because you can open an account, okay? That's the trap we fall into as retail traders. It takes practice. It takes practicing correctly, right? So, yeah. So just kind of keep that in mind, guys. Y'all can do this. I'm telling you now, you can. And that isn't so that, hey, you come join me so you learn how to do it. No, I mean, we'd love to have you. But however you learn to do it, guys, you can do this. But you have to get out. You have to become humble. You have to accept that you probably are incorrect in the way that you think the market works and that people work. And especially if a lot of what you think is based on sound bites. But you have to truly be open to the idea that you're incorrect and to really want to learn. And then that opens up to the things that you can learn, and you start viewing the charts differently. As long as you continue to fight it and think you know more than you likely do. And by the way, if you're just coming into the markets, or if you've been in it for 10 years and you haven't been consistently profitable, you don't know, guys. It's not meant to be mean. That's meant to be a reality check for you, because there's no reason to keep on losing money. Kick yourself in the rear and say, man, I don't know. I've been egotistical. I don't know what I'm doing. I need to figure it out. Guys, that was me my first few years. I was that way. I had to kick myself to kind of say, you know what? I'm tired of losing money in here. I want to learn what's actually going on, how it's actually working. It's humbling. It's humbling, guys, to really admit that you don't know. For most of us, it's a very difficult thing. But once you do, it opens you up to really understanding a lot more, guys. How to find the best, most profitable strategy to practice when there are hundreds of strategies and indicators. Shoot, even this new moon stuff seems to be working. Yeah, so honestly, just pick one. That's really what it is, guys. Just pick one. I think we get too caught up in the who's the best one. Well, they're all great if you learn to do them correctly, guys. If it's a legitimate thing. So what's legitimate? Elliott Wave's been around for, almost 100 years, right? Wyckoff's been around for about 100 years. Hearst cycles have been around for quite a few decades, right? K waves have been around for about 100 years. So, I mean, these things that have stood the test of time, these are probably the best things to do. Rather than jump on somebody's, oh, I'm Dave and I used to be a gym teacher 3 years ago and now I've made $10 million in the last 6 months. I think that's how the advertisements go online, right? Maybe they found something that works, but again, I'd be really hesitant. But just pick one of the things that's been around for a while. Stop listening to other yahoos out there who say, oh, technical analysis doesn't work. We do it day in and day out, guys. It does work if you do it right? A lot of that, though, is it starts and ends up here in your head. What kind of self-defeating things are you telling yourself that are making you not do it correctly? It's so much of it, guys. But it is. Pick one of the ones that have been around a while and just kind of get to it and really learn it, guys. There is no... I'm a firm believer in coaches, guys, or mentors of some side. There really is no better thing. If you really want to learn how to do a thing, learn the nuances, learn how to stay away from a lot of the things that usually get people knocked up in it at first, you'll pay, but you're going to pay a lot less than if you go in on yourself and try and learn and you're making all these mistakes in the market with your money. So, I'm a firm believer of that, not just with trading, but with everything in life, guys. I think if you want to learn something, you find somebody who knows how to do it and you pay them, and, it makes you better at it and quicker at it. You get to where you want to get quicker. Yeah. Let me see here. Really would like to hear my point of view on the Audi US, I can't even say it. The Australian dollar and the yen. I was looking at potential ending diagonal on the daily, but not sure if I'm seeing it right. Let me see here. Okay, so not everyone can play the trombone and make a living. All right, let me see here. So we're looking at the Aussie-Yen, right? Okay. I guess we can put it right on here. What's today? 26th? Man, it's almost the end of July. Can you guys believe that? It's crazy how quick time has gone by, huh? Yeah, we'll look right here at FXCM. Wow, look at that. Big wick up, big wick down, big wick up, wick down. It's finding in this area right here. You see this right here? You see that you kind of got some resistance there. Got some kind of support resistance there. Probably right around here. You've got this area and this one right here. So yeah, it's trying to make its way up in there. If I'm just looking this on the monthly, this looks like 5 up right here. Then 1, 2, 3, 4. That could be 5 right there. But you said the daily. Let's see here. Are you looking at from right here on the daily S1 here up? I mean, this is 1, 2, 3 down. Well, ABC, so WXY here. We've got this move up. I like the support right here at that pivot. So big move down followed by big move up. I want to see a breakout coming through there. No, from before. If you can give me a date to start from, that'll help out a lot. Maybe from the first move down. From here. What is this? Right around the 19th of March of 20. So basically when everything kind of died off except for the dollar. Is that what you're talking about? Let's see here. Maybe something like this, I think maybe. Is that maybe what you're looking at? Let's see. From 12.5. December 5th of what? Of what year? Let me see here. Let me see if I can find here maybe what you're looking at. That's this one right here of 21. Oh, the 12th of May. Okay. All right, you had that. Us here in the U.S., we read that the other way. Okay, so right here. Okay. Yeah, when you guys ask me about a certain thing there, give me like a date, a year and whatnot. The day there, it helps out a bit. Yeah, okay. So you were thinking that this was a leading diagonal right here, I guess? That would probably be an ending diagonal there. I mean, just looking from right here, this would be an ABC, potentially ABC, and then ABC. So, I mean, I could see like a 1, 2, 3, 4, 5. But yeah, I mean, again, overall, you do notice that we are finding resistance in this area. So, I mean, that does, do something for you there. What do we have? We had this swing high over here with the RSI back here in March of 22. And so that's kind of traveled down here as we've kind of moved up here. A lot of times that is a sign of a ending or a diagonalist everywhere. You'll send me to Twitter later on. Okay, yeah. Do that, and I'll give you a shot and let you know. I'm just having trouble figuring out exactly where you're talking about. But yeah, I mean, if we zoom on out here to the monthly, I mean, big picture here is, we're running right up into this resistance right here, right? Yeah, I mean, that's a nice move off that low there. Annika, checking from Sweden. Nice to have you joining in. Yeah, so I mean, again, I would be looking definitely at some kind of resistance up in this area. But send me that on Twitter there, and I'll respond to you. I'll let you know what I'm thinking as far as where exactly you're talking about. Looking at the monthly here, it does look like a 1, 2, 3, 4, 5 right here. And 1, 2, 3, 4 could be 5 right here. And so that could be an ABC right there before we head lower there. And that would make a lot of sense. So the yen itself, guys, has been in this historic kind of decline, right? Against everything pretty much, right? Against the US dollar, it hit like some 50, 60-year low. So it's been a big, everything else is really kind of appreciated well against it. So, just keeping that in mind, we should be nearing likely a reversal point on that yen. It only goes so far, right? And so if we're looking at the monthly here on this Aussie-Yen, you can see we're about to break out into overbought here on the RSI. Stoke RSI is topped out and overbought. That doesn't mean it can't rally up further here, but, again, as opposed to getting in down here, you're getting in at the upper end up here, I think. This is held, this resistance up here is held since 07, back over here, 97, right? 07 was a little bit higher up there. And then here in 13, 15. There we go. So definitely a bit of resistance in this area here, if you're looking at that. Let me see here real quick. Where is it? Oh, what's going on with oil real quick? Yeah, we'll just go ahead and open it here. I can't remember. I don't know how this stuff works anymore. They changed everything around. Load layout. There we go. That's what I'm looking for. All right, let's see here. What we got going on with the oil? Oil collapsing right now locally. So again, 1, 2, 1, 2 here. We broke down below what would be wave B right here. So we should have it coming lower. Wave parentheses 3 has a minimum expected target down here around 76, 72. Big picture on oil. is that we have dropped below this swing low here. Made the new swing low, and here we go. We tried to rally up through the S1 pivot on the daily here, being rejected. Looking for some continuation down lower. Again, I was talking about the two biggest contributors to inflation here. For that CPI number is energy and housing, and so we know housing is pulling back, doing all that. Again, looking at potentially the top of oil being up here at 130 or so, right there. But we definitely need to see some further downside to really kind of lock that in. But, looking pretty good at the moment here. We dipped down, came back up. So if we continue down through there, you can see that on this decline here, we've got volume expansion. And we've got larger candle spreads on this decline as it's declined down into this low here. So it got caught right here at this previous area where we got caught here and here, right? So, again, you look at that preliminary supply and then the buying climax, right? And then you've got your automatic reaction. You've got this attempt at an upthrust here, right, which gets stopped pretty low here. Dips down just below, a little minor show of weakness. Rallies back up, our last point of support or supply. It looks like, we've got this show of weakness here again. This rally up and rejection should lead to a nice move down, which would be your markdown. And again, that would be, that wave 3 heading down there. But remember that this rally up here, guys, up to March of 22 was, from April, May of 20. So, almost 2 years long. It's got to pull back. It doesn't just keep on forever, guys. So, again, I still think that looks like it's probably the top, and so we'll see if it continues to push down here. Obviously, if it does kind of break out here higher, I have no problem changing my opinion. We've talked about that, but I don't think oil goes to 300 like a lot of people are out there trying to say. Sometimes I wonder if they really believe that, if they're just trying to get on CNBC. I don't know. Natural gas, man. So natural gas had a spike this morning. Right? You guys watching that? Let me see here. So it had this nice spike up here. So I had to readjust my count here because I had this potentially as a wave 5. And then this being down. And so now we've got this as A, B, C, maybe as a flat here, expanded flat for 4. And then potentially 5 up, a 5 done up here. So we want to see some breaking down now. You can see that we did get that big rejection there, and then we got down even further here, but we're trying to rally back up. You can see that we're quite extreme here on this 4-hour RSI and Stochh RSI. Daily, we're about to break out there, but you can see that we've been riding the top more or less up here through most of this ride up. But daily's not looking very healthy at all. We jump at the weekly. Potentially some room on the weekly. Man, look at this weekly, though. Look at that move up there on that. Look at these fits and starts here heading up. But you can see that that volume is kind of dropping off as it's rallying up there, right? Through the weekly here. So we'll see how this one looks. We're going to have to see how this weekly volume looks. But this kind of thing usually happens at the end. When you do have that rally up there and you have some extended rally, usually you'll start to get these big candles and these gaps here toward the end, at the end of that rally. So again, we've been rallying up here since June of 20. So just a few months after oil, right? It bottomed out just a few months after oil. Here was the oil bottom. Nat gas was right after that. And then rallying up here. So yeah, basically you can get 5 here and then potentially 5 here. So 1, 2, 3, 4, maybe a 5 here. But that's it. After this breakout here, you see it went sideways right here on this high volume node, rallying back up, nearing these all-time high prices up here. Yeah. So, be careful with that. But, you know, again, I think we're probably getting near the end of the whole oil thing or the whole energy thing. You know, we'll see. We'll see how it continues to play out there. What else we got here? We've got gold. Gold trying to find some support right there on the daily pivot. It dipped just below this wave B here, so my expectation is that's going to continue lower. Wave parenthesis 5 is a minimum target, 16.42 and 30 cents. Again, bigger picture here. You know, once again, so we saw that the oil had dipped down below its two tops there, right? Gold's about, you know, nearing the same thing here. It's just about dipped below here. Potential double top there. Heading down. So, you know, I see no reason to think a whole lot differently at the moment. You know, we're almost topped out and overbought here with the Stochh RSI as we're rallying off the S3 there. But, you know, finding resistance right at the previous resistance there, right? Previous support right below that R2 pivot. If we can break out above that, I think there's a good chance we rally up toward, you know, this 1800 area potentially, 1790, 1800. But, I think that's probably about as far as we get, you know, kind of in this cluster here, those 1800s. I think, and then we just kind of continue down lower if we were to even get up that high. Right now, I've still got us heading a little bit lower to finish out before we get any real kind of reversal on that. So yeah. And I guess we'll throw in I've got to get going here. Geez, oh, it's getting late. Oops, wrong one there. Let's look at the Nasdaq composite here. So it's continued to fall off. Again, I've got this as a 1-2, potentially like a 1-2-1-2 right here. We're dropping down below. We need to get below, I believe this is a wave B triangle. So support is 11,322 and 84 cents. If we drop through that, that should add confidence to the idea that wave 2 is complete and wave 3 is in progress. Minimum expected target down here, 92.6305. That's just this 1, 2, 3 down there. So, yeah. You know, we're going to always pull back here before the Fed tomorrow and whatnot. As Hank mentioned, we got some big players earnings after the bell tonight. But, you know, those things don't change the trend direction, guys. The trend is set. Those things can give you a knee-jerk reaction in the opposite way, you know, look like it's a trend change. But ultimately, the trend is set, you know, because of other factors, right? And so they're all just, you know, pawns in the game. They're all just pieces of the big puzzle, right? So you maybe get a knee-jerk reaction, but I think, you know, again, trend seems to be set. You know, here we are off that swing high up there in November of last year. You see we found support just right here, right? So if we lose that, coming in down. This was that leading into February and March of 2020 right here. So that's part of that, you know, with the Dow. This is actually an expanding triangle here. So it gives us the wave 4 and then the wave 5 at the top. So same thing there with the Dow. So, yeah. But here's the rally. I mean, what do I like about it so far? I do like that we broke out above the daily. We get rejected R1 where we would expect. Right now, we're trying to find support right here in this previous area of resistance. So if that were to hold, I could see some possible higher move up. But you know, locally, you know, it's where it is, where I'm looking for it to break down. But bigger picture here, you know, there's some possibility. I mean, if we can get a breakout above this swing high here at 12,320 and 12 cents, that might suggest again that we've got a leading diagonal 5 waves down here, and that'll get us probably a rally up here to 14.5. up toward here, 14.3, 14.5 area. And so if it happens here with the Nasdaq, it'll probably happen with with the S&P and the Dow as well. They basically, even if they lag a little bit one or the other, they usually run in pretty much in tandem. So, yeah, we'll see what happens. Kind of a point where we're at here. Do we break down or do we break out? If we break down, it's 1, 2, 1, 2, and then 1, 2 heading down. If we break up, this is 1, this is 2, a bit of a reprieve. The market will go crazy. Jim Cramer will say, "See, I told you that was the bottom." And then, you would get a rejection in this area, most likely. And that breakdown below the low there, then they'd all just like poop their pants. Be like, "Oh God, we're the wrong way. Everything's going to hell in a handbasket, quick." Everybody trying not to be the last person. It's like playing hot potato, right? When you get that, when you think this is the bottom and it rallies back up and it's only wave 2 counter trend rally, and you notice it's wave 3, all of a sudden it becomes hot potato. Who's the last person out of the stocks, right? You want to be the first out, or as close to the first as possible, because the closer you get to that wave 3 really kind of confirming itself, the closer you get to price just really just kind of snowballing down. It makes it really difficult to get out at any decent enough price. So yeah, but anyway, that's what we're looking at, guys. What do we got going on here? We'll take one more quick look here. Bitcoin before I jump out of here. Almost a bullish engulfing off the low there. Rallied up into the previous area of support here. Got rejected. I could see this potentially being maybe like an ABC as a 1, 2, ABC as a 3, 4, ABC as a 5, getting to this target area down here, just a little bit lower. I can see that. But again, looking for that breakout above that 21,258 and 76 cents. That's the first kind of hint that, okay, wave 2 may actually be complete. And then, like you said, you want to get through wave circle X up here, 23,036 and 46 cents here on Coinbase. You want to get above that to say, okay, yeah, most likely wave 2 is done. Wave 3 is in progress up there toward minimum that 29,525 kind of area. Along the way, you can look for targets here. Once you're through, this level right here, you can look at the 15-minute pivot there at the top of the range, right around 21,735. You can look at wave parentheses B here, 22,271, or that descending channel resistance. You can look at the 1 and 4 hour pivot up here at around 22,536, 548, whatever, right around that area. And then, of course, like I said, wave circle X there. You've got the daily pivot right above it as well, right there around 23,172. So, there's just kind of targets along the way that you would watch as you're trading it. And as it goes through each one, it kind of increases your confidence in the idea that maybe that bottom may be in. But the big one that you need to get through is this wave circle X here. That's the one you got to get through. Because if this count is correct and this is ABC for W, X, and then ABC for Y here, well, that's what you want to get out of there, right? I don't know. Can you get in here, maybe go 1, 2, 3, 4, 5? So maybe A, B, 1, 2, 3, 4, 5? Or 5 coming up here. Maybe. But in either case, it's still that same 23,036 and a half kind of area that you need to get above. All right? All right, guys. Well, anyway, that'll do it. As always, I appreciate you guys joining in, checking out with me. Hopefully I left you with some good stuff, just about trading in general, guys. I'm going to tell you this. At the end of the day, the most difficult part about trading is all up in your head. You are your biggest enemy out there. It's not Wall Street. It's not crypto whales or whatever nonsense is out there that people try and blame it on. It's really all in your head. And so that psychological side of it is really where you can fix or be broken, right? So proper risk management helps a lot with that. If somebody's telling you as a new trader that, you can lose up to 5% of your portfolio on a trade, don't listen to them. Don't do it. You're going to be, guys, it only takes, what? At 5%, it takes like 20 trades and you're pretty much broke, right? Because every time it's a little bit less, right? So it's not quite broke there, but just about. 20 trades, guys. That's it. 20 wrong trades. Stop listening to people about that nonsense. Stop trying to be rich overnight. Stop trying to think that you can get this figured out, in a day, a week, a month, a year. Okay? You can get your hands on it over time, yeah, but it's like any other skill you have, guys. And this seems to be the hardest thing to get new traders to understand. It's like any other skill. It takes practice, and it takes practicing correctly. It takes lots of practice. The more practice, the better you get at it. But you're not going to become, a professional footballer, the first time you touch the ball, right? Or even a year after you touch it, right? It's going to take years of practice. Same idea, guys. Okay? But you can do it. You can do it. Hank, enjoy that pizza. Everybody else, have a great day. As always, like I said, you can join us there at howtotradetowin.com. We'd love to have you there. I've got those big announcements coming probably on Friday, but worst case scenario, it'll be Tuesday. But we're trying to get everything set up so we can make those announcements on Friday. Exciting times ahead. You know what, guys? At the end of the day, if you're trying to guess the bottom right now for some investment, guessing begets you guessing results, right? If you trade the local areas, though, or you wait longer to get better confirmation on your investment, well, okay, there's a better chance. But, don't try to get anybody to guarantee you that the bottom's in or the bottom's not in or all that other nonsense. I think it may be in. I've put in my money on the bet that it is. You guys have seen that. But I have in no way guaranteeing that it is, and I have no problem changing my mind if it's not. I've got targets downside we've talked about, right? So let that kind of hopefully make you not feel as bad as trying to guarantee that there's a top or a bottom or some other nonsense going on, or a bottom or not a bottom in. All right, guys. I appreciate you guys joining as always. I hope you guys have an amazing week. Trade safe, and if I don't see y'all in Discord, then I'll see y'all on Friday, 11 a.m. Central Standard Time. All right? Take care.